Welcome to another edition of Dukascopy Weekly Wrap-Up, where we look back over the past week and the main market events. Steve Lucas, technical analyst from 3cAnalysis, joins me down the line to give me his insights into these events and how the markets reacted. Steve, thank you for joining me. First of all, what events and data releases have been on your radar this week?
Okay, well, I'm a technical analyst, so I look at prices, and the main driver this week, I guess, or the main theme in the market has been the weakness of the yen. That, along with the bullishness of equities and some divergence in that the Apple stock, for example, traded at an 11-month low this week in light of DAX trading at a 5-year high. So I think the big themes this week have been weakness of yen, weakness of sterling, bullishness of stocks, and bullishness of gold and oil. I think they're the main themes this week.
On Tuesday, key data released painted a mixed picture for the US economy. Retail sales were strong, manufacturing data was weak, and the producer price index came in within market expectations. How did this data affect the dollar?
Well, I think your summation there summed up what happened to the dollar itself. It did absolutely nothing. On Tuesday, the mixed data just led to sideways trading, and it was the other themes that sort of dominated. We actually had a pullback in the yen, so some strengthening in the yen that day. The dollar itself, the dollar index, did very, very little, and it did very little on the week too, to be honest.
All eyes were on the yen this week as it weakened to levels not seen since mid-2010. Was this only due to Bank of Japan monetary easing speculation?
Yeah, well, obviously people have been talking about the Bank of Japan easing for some time, since before Christmas. And our signals have been bullish since November. If you have a look at the charts, there was a sequence of lower monthly highs going into the end of the year, but that was ended in November, and we started posting higher monthly lows. And we also look at some statistical information, and the percentage of higher monthly the higher monthly highs outweighed lower monthly lows for the first time since 2007. So we got some early signals back in November, December, and what we've seen really this week is confirmation of those. You know, as you mentioned, dollar yen's traded at a 2.5-year high, euro yen at a 1.5-year high, Aussie yen at over 4-year high, and I think those trends are going to continue. And you know, like we said a minute ago, we had a pullback on Tuesday, but I think those pullbacks are going to be bought. Interestingly enough, dollar yen's just trading towards one of our key targets, or one of our first targets for this year, and that's at 90.72, which is a 78% recovery of the entire 2010-2011 sell-off.
The head of the China Security Regulatory Commission said this week the country could increase by tenfold 2 programs that allow foreign investors to buy stock and bonds on mainland markets. How did this statement affect the markets? China's
an interesting one we've been watching. It's one of our big calls for this year. If you look at the Chinese stock market, it's really been in a downtrend for some time. But we got the first signs of life again back in December, just as the yen started to turn. We started seeing some turning signals in the Shanghai comp. And there was a massive reversal in the last week of December, which we were a bit concerned about being the last week of the year. But one of our big calls, and if you overlay the Shanghai comp against the S&P, it's broken a pivot and it's broken a trend line. And for the last few years, we've had complete underperformance in China against the US. I think going into this year, maybe for the whole of this year, we're going to see a reversal of that, and that's started to happen. So we've seen some good strength. This DMI thing I was talking about before, the statistical signals turned as well for the first time in some years, and we're very confident that China's going to outperform. Now, whether those statements are going to help us with that call, I don't know. But looking at it from a price perspective, we're very confident that China's going to do well this year.
You mentioned equities earlier. Equity markets have rallied strongly since the beginning of the year. What have been the big movers on the equity markets this week?
Well, equities haven't actually moved a lot this week, but there's always interesting facts. The most interesting fact that people don't look at too much is the Russell Index. That's the Russell 2000, the 2,000 smaller cap stocks. Well, that's posted a record high this week. I've mentioned already that DAX has posted a 5-year high, and we've obviously got all of the US markets trading up towards their old 5-year highs, Dow, S&P. So people are pretty confident about the stock markets. But another interesting fact is that we had I think the highest number of, like the guy in the street investing in his mutual fund, I think we had the highest involvement in that in 4 years. So it's a little alarm bell that rings to tell you that maybe the market's due for a bit of correction, and we're looking out for that. There's something else we look at, the FTSE DAX spread. Whenever you get FTSE outperforming DAX, you tend to get a sell-off in the markets, and we've started to see some of that FTSE outperformance in the last week or two. So while we're bullish of stocks generally, and I think 2013 is going to be a good year for stocks, last week the market traded sideways to higher and did post those new highs, but we're getting divergence on from a technical analyst point of view, and I think there's going to be a sell-off pretty soon. But for the time being, we haven't had that sell signal, and we're staying long.
That's all from me this week. Thank you to Steve and to all our guests. I'll be back on Monday with a summary of next week's events. For now, I will leave you with some great quotes that have stood out from our interviews this week. Have a great weekend.